Hi, everyone. Can you see my charts here? Happy Veterans Day. You may not agree with the politics of conflict, of military conflict, but you have to be for the troops. Braver than I've ever been. I was happy to have a very high lottery number in the dormitory at Northern Illinois University. Okay. So that was the Vietnam era. I sure didn't want to go. All right. So respect them. Hello, Michael, Kevin, Ren, Alexandra, Hugo, Jeffrey, Money, Kevin, Alexander's there. Okay, everyone. So, the Euro top Monday, right? Okay. It was, this top right up here. And cable topped last night. And pretty interesting area where it topped from 78.6. Um, Potential reversal day right up here at 78.6. So, just because you didn't sell it at 33.10, it was also Blake's chart of the day showing it up at resistance. Okay, so I think we've got a top here as, I was early on some and then sold some at 78.6. And I've already booked some, but this could turn out to be pretty important. We'll see what we have on the weekly here for a 2-week reversal. Yeah, it's going to take a lot. I mean, I don't think we're going to have a 2-week reversal. You never know, but that would take a close of 129.45. Yeah, that's 300 lower. Whereas in euro, I think you have a reversal week. Well, you have a reversal week, but it's much closer to a 2-week reversal. That would take 116.45. So that's 120 pips away. Anyway, the newest development is right here. In the pound. Negative day, check the 4-hour out, and the 2-hour is hanging, maybe it was the 15-minute, right? Yeah, so right underneath this 32.20 level, which is pretty important. Also kind of was a wedge up here. So, and why did I lean towards a shortened cable? You may ask, right? Because I intelligence gather on Forex Analytics, okay? And if you look at the active tickers, all right. Let me move you guys out of the way. Sorry. Okay. Because of Gregor's bearish count on Elliott Wave, so I favored it. He was neutral on euro, but he's the structure and cable he felt was still long-term bearish. So, this was the one I was stalking for the move. Okay. So see how Forex Analytics helps? Can you guys see how it helps me? Okay, I'm just telling you how it helps me. So of course I had to wait for, some of my stuff like, I needed divergences to go with it, for it to line up with my edge, which is RSI, and Gregor's edge is Elliott Wave, right? So helped me, kept me focused, looking for the trade, and here we are. All right, so I also have some plans. It's interesting, the dollar's making a new high without the yen. US dollar yen's trying to, and I guess I could call off my look for maybe one more new low in the dollar. Pretty good week. I didn't buy it down here, and this was consolidation. So I'm expressing it in the pound. But I did want to talk about indexes. Okay, so we had pretty good follow through in NASDAQ yesterday, and we're up today. I just want to show you what it held besides these moved 50 and 200 on the 4. I've been looking at this 50-day on right here. Probably hard to see because I have all these fibs here, but you know, the 50-day, trust me, the 50-day held on the NASDAQ 100. NASDAQ 100 is outperforming S&Ps today. But this is what I'm looking to do. Into the end of the week, and we have Norm Winsky into the end of the week. So I know when Norm, gets a hold of me and wants to be interviewed, and he's going to be here Friday, that there's some type of planetary aspect that he wants to be interviewed and visibility into it. But I put together the fibs on NASDAQ. Maybe the S&Ps can grab another high. It's possible. I still think this might be a failing rally too, but looking at NASDAQ is something that Blake and I brought your attention to on the rotation on Monday on the vaccine news. I'm looking to sell a rally up around 12,000. Okay, so I'm looking for a failing rally. People will ask, well, Dale, if you want to sell it at 12,000, why don't you just buy it here and ride it up? Right? Because that's not the trade, because it could just break from here. So why would I buy it with a bearish bias? I just have to be patient for this, like I was patient with cable. Okay, so this is the weakness. We had some more follow through to the downside. I don't know what's going to happen in Amazon. Amazon, I think there's some bad news out of Europe for it, some suit. But I mean, NASDAQ's on the verge of breaking down 2,900. It's only $135 away that, Amazon could do that in a day. So it's probably going to hold today, but I still am looking for a breakdown in Amazon. You need under 200 for Microsoft, and Google looks like a nice little top. Maybe we'll get an island here, and the other one, Facebook, put in a pretty bad day yesterday. It's barely hanging on. So, and Steve showed the chart between I think the NASDAQ 100 and the S&Ps. That is also a head and shoulders formation. So, I'm not going to be shorting oil shares. I'm shorting the darlings, MAGA FANG. Okay. So, is there anything else I really want to cover here? I think that's it. Euro pound. Yeah, I had to give up my bullish bias once we took out this. So I don't know what to do with it. So when I don't know what to do with something, I do nothing. And I think that's about, oh yeah. If the S&Ps rally, maybe gold could still give us one more pop. We haven't made a new low yet. Maybe we get like, this is A, and if we put in a higher low, and then we have something like this from say 1860, that could take you up to 1900, 1910. So if we get a rally in gold back to 19 to 1920, I'll give it a shot up there. Okay. So those are my calls. The next one's yours, 800-899 bear. Anyone? My phone's ringing off the hook. Blake, thank you for your service, you veteran, you. Turn on your big microphone.
Hey Dale, sorry.
It's all right, bro.
On the mute on. Thank you. I want to say thanks to all service members. As I said yesterday, it doesn't matter what country you served in, where you served. Thank you all for your service, for those of you that have served in the military, because whether it's the United States or your country that you live in, you're preserving freedom and defending it. So unless I have some people from North Korea listening in, but
How about some old Nazis?
yeah, they can go screw themselves too. Just kidding. But anyway, I want to say, happy Veterans Day for everybody that's done their time in the service, no matter what country you're in.
Yeah. All right.
And
I just had to throw that out there.
Hold on,
All
really
right,
quick.
bro.
I'm just trying to exit. Oh no, shit! I was wondering what happened there. Sorry. Hold on. I'm sorry. I gotta just trying to figure out what the heck is going on. Okay, sorry. Let me get out of that.
There's a German guy saying Guten Morgen.
All right. I just messing with you guys. Anyway,
right.
So we got to get to it. It's yesterday was very slow. Today could be slow as well. I actually was just taking some profits here off of if you guys are, let me go ahead.
Want to take the screen, bro?
I'm gonna do it right now.
All right.
Right now. Okay.
And
so
nice,
if you guys are playing this,
very nice chart on the chart of the day for cable.
Oh, thanks. Yeah,
kind of nailed it, man.
Thanks. I think that it's good resistance up there.
Yeah.
But I'll talk about that here in a minute.
Okay.
But for those of you guys that are playing this dollar Mexican peso on the long side, I've been peeling off a little bit up here. As you can see, I have an alarm set for 2050. I still think while we're below this 2085, you got to be careful. So I'm trying to sell into rallies. I did the same thing. And if you're in the chat rooms, I'm long dollar Canadian. I've been long dollar Canadian since below 130. So, and I sat in it all day yesterday too. So I bought it 2 days ago, and it's just been kind of grinding hard. But it actually just tested previous support, current resistance, and if you're on the long side of those, you just have to be a little careful. You just have to be. I'm still long. I just have whittled down my position a little bit. So I'm trying to keep a core position, but that's kind of what I'm doing. One of the reasons why I'm doing it, just you guys know, I don't trade. I trade everything, and I don't trade every. I don't put up every pattern in play that we do, but I trade most of them. And one of them that I traded yesterday was this Euro New Zealand. I actually, this Kiwi's kicked my butt the last couple of days, or this week actually. And I was long the Euro New Zealand, and then I had to go run a bunch of errands last night. And I was long on this, this what I thought was a Gartley pattern, and then the RBNZ. I didn't think they were going to be as non-dovish as they were, but the problem is let me just say that the risk was buying it down here and putting my stop below 72, which I did, and I got stopped out. But the risk reward was to be long, because this is a multi-year trend line. We're actually below it right now, so I'm going to be watching the Kiwi by the end of the week. This is a really bullish. The Kiwi is very bullish right now. If for some reason, which it can happen, today's Wednesday. By the end of the week, if the Kiwi just reverses and drops back below 68 cents, then it's going to be a big reversal going into the next couple of weeks. But it's hard for me to see that right now. And the Kiwi actually looks pretty darn bullish. So it doesn't mean that everything looks bullish. I mean, you look at the Aussie looks like crap. Cable looks like it's turning lower. Euro still is trading really heavy, and the Euro looks like it could trade back below 117. So if the dollar continues to strengthen, across the board, it could eventually turn the Kiwi lower. So just think about that. Don't just be really, if you're going to be bullish to Kiwi, I think trading the Kiwi against other currencies like maybe the Aussie New Zealand. I mean, you look at the Aussie New Zealand, it's rolling over and breaking some pretty key levels of support today. Like the Aussie New Zealand looks like we could trade back down towards the 618 retracement, like the 104 level. I mean, that seems very possible. So again, if you want to express long New Zealand, maybe thinking it against something else other than the dollar might be better suited. Okay, so let's talk about the rest of the markets, and let's talk about the euro. And by the way, this is again, I just want to reiterate, Happy Veterans Day for those of you that have served in the military. No matter where you served and what country you served, thank you very much for your service. I appreciate it. We all do. I did my 4 years, in the Marine Corps, and I don't know if I ever told you guys this story. I got to tell you guys a story. So, I was 17 years old. Dale, are you here? You got to hear this story.
Yep.
So I was 17 years old, and I'm going to tell you this quick story. Hold on. Let me grab a sip of my coffee. So my two best friends, which matter of fact, I saw one of them last night. We were 17 years old, and we knew that we were going to be going to Iraq. We knew that, we're going to Iraq. It looks like, we're going to be going. And myself, my two buddies, we said, let's, what are we going to do? We're going to graduate high school and what, go to college? Well, let's go see the world. Let's go. Let's go in the Marine Corps, or let's go fight this war. We know we're going to war, so let's go. And we were all gung ho at that time. And I said, I'm like, well, if we're going to join the military, we're not joining like the Air Force or something like that. We're going to the Marine Corps. We're going to go be the best that we could be, that type of thing. And so we all went to the recruiters and basically signed up without parental consent. But our parents had to sign off on it eventually. But we went to sign up, and so like 2 weeks later, we go in to actually formalize the paperwork, and we're so excited about doing this, and parents finally are on board. So we're going to war. So we go in and we select our MOS, or our military specialty, basically, and we all walk out. We go in there separately, and at the very end, I'm like, man, I can't wait. We're all gonna go to war together. I'm like, it's so cool. I hope we get in the same infantry battalion. And my one buddy goes, infantry? He goes, dude, I'm going to be an aircraft mechanic. And my other buddy's like, infantry? I'm going to go drive tanks. And I'm like, damn. So of course I was the only one that went in the infantry. Yeah.
Yeah. Good. Yeah.
They bailed on me. Total bunch of pansies.
Did you see them over there?
Yeah, actually, a funny thing is, the one that drove tanks, he ended up going to Iraq, because I didn't go because 2 weeks before the ground war, or 2 weeks before I graduated from School of Infantry, the ground war ended. So they sent me to Guam for a year and a half, which was cool. Nice. It was great duty. Yeah. And actually my buddy that was an aircraft mechanic, he ended up being a navigator. He came and saw me in Guam. He was a C-130 navigator. Then my other buddy, the one that I saw last night, he actually ended up going to Iraq to pick up, he's basically on cleanup duty. With his tank battalion. And then I did the
oil well fires.
You will pick up dead bodies is what he had to do. And so, and then what I had to do, or what I did, is I saw him in Africa, in Somalia, outside of Baidoa, which is a city outside of Mogadishu. I saw him out there, and it was cool. But I also saw him in Japan, like for my 21st birthday. He happened to be stationed out there. I was stationed out there at the same time. So we I've crossed paths with my best friends for many years in many different places. So anyway, okay, enough about that. Let's get to analysis. So just thought I'd share that funny Veterans Day story. Hopefully you guys got a little chuckle out
It
of that.
is good.
All right. So here's the euro, and I do think the euro can find some support down here. We're at the 50% retracement. 618 comes in around 170, 117, 24, 25. Maybe. So we're at the 50% right now, and you can see this previous high is offering us some support as well. I do think that any move back down to 117, which is in between fib levels, but I think that should offer support if we get down there today. I doubt we're going to get down there today, but you never know. Any rally back towards 118, are we on the daily chart still? We are. Okay. Any rally back, you can see this like nice little head and shoulder pattern developing. So any rally back to 118 should find resistance now. Okay. So, and this is range cable. So yesterday, yeah, we were facing all sorts of resistance up here. I thought we would stretch a little bit further. I was kind of hoping we would, but we didn't. We just stopped at the 78% retracement. Underside of this broken trend line is all around the same area. So for today, and this is horizontal resistance here, is 133.22. We shouldn't.
Oh, it's right. Okay.
We shouldn't rally back above 133 now. So, and it is in range.
Be back in a minute, bro.
What? Oh yeah, sure thing. Support for today should be at 131.90. Okay. Aussie dollar. So Aussies, the Aussie's been trading heavy, and this is one of the things that, as this is my chart of the day. What, 2 days ago? 73.35 was resistance. At this point in time, we would be lucky to challenge 73 cents, and I think 73. Any move above 73 cents, so maybe like 73.10 would be a really probably a nice place to be on the short side of the Aussie for now. Support, if we break below 72.40, I'm going to write this down as important, because if that breaks, I've got to assume that anybody who's long Aussies right now, their stops are right here. Anybody who's been long for the last couple of days, their stops are right there. Matter of fact, this alarm needs to be a little higher. Okay. So anyway, that's how I feel about the Aussie. I'm just going to be, looking for shorts if we break through that support. Kiwi, it is bullish. Thanks to RBNZ. We did extend to the 127% extension of this move here. So resistance now 69 cents, support is 68, and it is bullish. So dollar Canadian is on the cusp of squeezing, right? I mean, we move. I'm more interested I know I've got this resistance here at 130.75. I'm more interested on a move above 131. So I'm going to write down 130.75, which we're here, 131. That's important. Okay. Because my opinion is if we get above that, we are going to squeeze. And this is where, if we get above like 131, you got to start thinking, okay, do I really want to be long the Kiwi? Because that's when you start to see squeezes happen in places where you don't expect it, right? Because you're seeing the dollar Canadian start to squeeze, and that's one thing that could really cascade into dollar buying in different places, in my opinion. Support, any dip back down to 130 is going to be supported now. There's shorts right now that are shorts right now are like, I hope we can get anywhere close to 130, because I'm going to start covering. It's not just it's not just you and I that see that false breakdown. You know, it's not just you and I that see this support holding. Okay. Everybody does. And, you know, if you're short, if you're like, you know, I think you know, you've been in the camp that the dollar is going to hell in a handbasket, you know, you're looking at this dollar Canadian going, man, I don't know if I really want to be short anymore. So, you know, dips now towards 130 are going to be very well supported, in my opinion. Um, let's see. Where am I at? Dollar Mexican peso. Okay. Let's start there. So the dollar mex, I am long. And, you know, from a couple of days ago, as we were trading back when we were below 20, I was buying through this dip here, knowing that we had the 161% extension of this move, 78% retracement long term, and also previous high here. All that support, I was picking off long. I'm not super sold on it though. I mean, I don't mind being long right now, but I'd really want to see a move above this 2085 in order for me to be bullish. And, you know, there's some work that needs to be done. One of the things we need to get above 2050 today. So I'll write that down, 2050, right? I'm just going to keep a couple digits here. Yeah, I guess I can do that. Key is going to be 2085. That's going to be the key, right? For right now, and then support is 20.03. Okay. I'm putting range because we're holding so much key support, but I'm not even convinced about that. I actually almost feel like it should be bearish. Yeah, I know I'm trading counter trend. I totally get it, but that's what traders do, right? If you're trading counter trend like I am, then you just take smaller positions. That's why the US dollar or the euro kiwi didn't hurt that bad yesterday, because I was just taking a smaller position. Dollar Swiss. Okay, so here's the dollar Swiss. Again, I know we've talked a lot about this, you know, how well it was supported down here at 90, little false breakdown. We are probing this downtrend line. And so this is showing you how increasingly important this 92 cents is, because if we break above 92 cents, we're probably going back to that 92.60, 92.80, I think is what it was, 92.60 right here. And then we'd have so you can see this is 127% extension. Then we'd be back at the 93 cents a level again. Any dip down to 91 cents is going to be very well supported. We are in a range. Do we have data coming out today, guys? I know it's Veterans Day.
We have nothing.
Nothing.
Okay, good. Okay, good. Thanks, Stel.
No
I didn't
worries.
think we did, but I just wanted to confirm that with you. US dollar, Norwegian krona, same thing as yesterday. Support right now are these lows, 896. Resistance is at 913. This is another one that if we start to squeeze above this 13 level, oops, I don't need that. We start to squeeze above that 913 level, that's going to be another trigger that says, okay, I don't really want to be long the dollar, or I'd short the dollar, you know, in any way, shape, or form. So let's write that down. 896, 913. I think we wrote down 913 or 914 yesterday. It doesn't really matter. So range, dollar yen. This is one that I think people continue to short up here. But the fact of the matter is if we break above 105.60, I would be really nervous about being short this one, especially after the move this week. I know it feels natural, like, oh, stocks are going to come down, I just want to short the dollar yen, but I don't know. yeah, as you guys know, I'm just really, I don't know what to do with the dollar yen. I have very limited. I traded it short last week through here, because the guys in my office were so bearish. Then it's like, okay, well, I guess I'd be the stupid one if I'm not short too. I did have a case of FOMO. I'm not gonna lie, and I made a little bit of money, but I don't like it when I'm trading and I don't know why. You know what I mean? I don't like that. Doesn't feel good to me. I don't. If I can't see it myself, then it just doesn't. I don't feel right with it. So anyway,
I'd
105.
like
is
to buy a
support.
break in it, Blake.
Huh?
I'd like to buy a break in it down towards your 104.40.
Yeah, I mean, I think that's as I told you guys plenty of times. The moves below 104.50 just they're not sustainable over time. You can see it historically. Just
Yeah.
for the last couple of years, these dips down here, they just don't hold. And at some point, that's going to give way, right?
Yields, especially if you think the 10-year is going to
Yeah, right.
trade
If you
much
think yields
over
are going
one.
from
Yeah.
right, if you think yields are going above one and closer to
Yeah.
1.5,
Yeah.
why would you want to be short the dollar yen?
No.
Right. That great point, Dale. Okay. Sorry, I better finish up here.
Go ahead.
But
I
no,
always
that's
interrupt you. I interrupt you too much.
No, it's a great point. It really is
I
a great point.
yeah, I learned it from Steve Volge, so it's his fault. Okay.
Okay.
All right.
Interrupting or about
Yeah,
you?
interrupting.
Just kidding.
Right. You knew how to do that long before
Oh,
I
here
was
he
born.
is. Here he is.
See?
See
how I
there you
learned?
go. There you go. Hey, Steve, how you doing?
You're right, Steve.
Okay, I'm gonna finish this up so I can start interrupting Steve. Let's see here. The dollar index, we're above the 38% retracement. This is the resistance we wrote down yesterday, right? I believe so. I think we wrote down 93. So now we're making our way back up. I mean, remember, this is Veterans Day. Bond markets are closed. So I'm not expecting some explosive move today. It doesn't mean it can't happen. I don't think I'd sell the dollar index here. But if for some reason we tested the 618 retracement, you guys know, I'm a big fan of the 618, obviously. So if we get back to 93.50, which is a good solid number, probably be letting some go, especially if you're like, let's say you're short the euro and the dollar index makes its way up to 93.50 today. It kind of spikes up here for whatever reason. That means the euro is probably trading at 117.20, something like that. It's probably not a bad place to just hey, I was short, take a little bit of profits, that type of thing. Support 92.60 looks to be pretty solid. Gold. This is the one thing that I don't think it's going to happen today, but I'm going to tell you right now, and I'm going to be very very specific about gold. If gold breaks this 38% retracement, I am dead set on looking for dollar longs at that point, if I'm not long already. So because I believe if gold breaks this 38% retracement, it caught everybody long, back up here. It's key support. We should trade down to the 50% retracement, maybe even lower. Okay. And at that point, I'm going to be like, okay, what dollars can I buy? Yeah. I might be long some, so I might say, where can I add? That's exactly what I'm going to be thinking. That support comes in at 1838 right now. Cash. Resistance seems to be holding at 1892. So I mean, I'd give it back up to 1900, but we are in a range, but we're threatening. S&P. S&P's had a nice little recovery today, but it's really not a recovery. I would say it's more of a getting ready to bear flag it, if you ask me. It's just buying time now. Seems like it. And I'm not short. I'm just, this looks like a very impulsive move. Is that what you call it, Steve? An impulsive move, and we're just kind of grinding higher, ready to roll back over again. So I think support, if we break back below this high, 35.30.
It is an impulsive leg. But that can be part of a corrective move.
Thanks. And this resistance right here is the previous support, 50% retracement, and that's at 35.95. Okay, I'm done. All right. How you doing, Steve?
Good. How have you been, mate?
I did one of those. I woke up at like 2:30, which is way before my normal wake up hours. I woke up at like 2:30 and I'm like, wow, this is too early. And then I tried to close my eyes and I never really fell back asleep. So that stinks. So anyway, that's it, guys. There's your bias chart. And I am going to pass it over to Steve. And
thank you, Blake.
No, completely ignore Stelios today.
Totally.
Yeah, why not?
Oh no, how you guys doing this morning?
Very good, thank you. Excuse any background noise. My dog is snoring right next to me, so it's not me, it's him. Anyway, all good, Blake. Thank you.
All right. Well, hey guys, I want to thank you all for being here, and I appreciate Steve, Stelios, you guys being here to hang out on this Veterans Day. Dale, thank you very much for always being a great host and adding always great value from your years of experience. And I'm gonna say, if you haven't tried out Forex Analytics, do it. It's $1. Come join the chat room with us, because we probably could use some company because it might be kind of slow today. I'm just kidding. There's
that's how it looks like.
Around.
Thank you, Blake.
All right, thanks, guys.
Thank you.
I'll talk to you guys.
Thank you,
soon.
Blake.
Bye.
Bye.
Bye, Blake. Thank you. Okay, guys, it's been a pretty quiet morning. A couple of things to mention. Blake did touch upon the RBNZ left rates unchanged, and they're indicating that they're not going to be going negative, which is good. We've seen examples of central banks going negative and it's not really working, or at least it doesn't seem to. So they've kind of excluded it for now. Same from the Bank of England. There were some, I can't remember who exactly it was from, but it's from some sources that, look, it's probably not looking like they're going to be doing negative rates, at least not now. So, the pound has been relatively strong over the past few days. There's also, obviously, there has to be something on Brexit because we're in mid-November now. I mean, I thought they would have been settled either way already, but it hasn't. And there were more EU sources saying that they're not going to be, we shouldn't be expecting updates on Brexit this week, maybe next week. And the EU diplomats, I'm just reading a headline here, they're expecting negotiators to present a deal in the middle of next week, unless talks have made a breakthrough or collapsed earlier. So we wait for another week for that. I know you're very happy about that, Steve. And meanwhile, the pound is slowly gaining ground. I remain of the opinion that in the end, there will be something agreed. I don't know how how in depth it's going to be, or what is going to entail, but I think it's going to be some kind of agreement to start with, and then they're going to work on it and somehow managed to avoid the hard Brexit. That's my view. And I had been waiting to short EG at 92. It's not coming, is it? So,
Well,
yeah, it's okay. It's all right.
I tried.
You tried, I know. Just a few more billion and it would have done it. But, so that's from the UK side. What else did we have? Oh, very little else. I mean, we still have obviously the main. This is the question mark still of the U.S. elections. Now, all the media are saying President-elect Joe Biden. Technically, this is not the case yet. This is going to be in December when he gets announced officially, and there's still a question mark because we all know Trump is fighting it, and I don't know the legal stuff behind all this and how the process works, but it's not a given yet. It's not 100% yet. So the market's casually ignoring everything and just moving forward. I just want to indicate to everybody that, look, this is not done yet. Just we have to be a little bit more patient. Otherwise, some comments from OPEC today about demand being projected to be lower next year than previous projections. So that might put a little bit of a break on oil's recent good run. And
it's off the highs for today, but I mean, still looks good.
It's had a great week, great few days. And otherwise, FX wise, there's not much I'm looking at. I'm still short Euro Norway. It's been doing very well recently. I'm lowering my stops as we go along, and it's my last piece that I have. And if we see a spike, I'm going to get taken out and revisit at higher levels. Euro Norway, dollar Norway, everybody knows I want to keep shorting those on spikes, and it requires a lot of patience and a lot of how should I put it, stop flexibility, because you have to have deep stops for this. This can move massively one way or the other. That's a good thing. Oh, by the way, metals are getting a little bit sold now. Otherwise, a lot of Uzo. Yes, Jeffrey, I actually don't like Uzo. I'm weird.
Me neither, actually. Yeah, but I don't like beer as well, so I'm not.
Yeah, me neither. Well, we agree. Okay. That's it for me. I don't.
You winos.
We are winos. That's it. I don't have much else to say, so maybe we can have a look at a few charts.
Absolutely. Now, you mentioned quite a few stuff which we can, visit. For example, metals. We had a massive down day in gold and silver. Probably we're just consolidating. I mean, logic says that we should have some continuation to the downside following these days. We've already discussed about downside targets and downside levels that are appealing. For me, 1800 to 1820 for gold is a definite level I'm looking for. Otherwise, if we break through that, I think that we can make it all the way down to 760. In the case of silver, first area of support is here at 23. Second area of support is at 21. As long as we trade above $19, I have absolutely no worries that this is anything more than a corrective move to the prior huge move higher. Now, there was somebody asking, since we're at metals, asking about platinum, palladium, natural gas. So first of all, platinum more or less doing nothing, right? It's been consolidating. It has avoided breaking one way or another, but in general, I do think that it's just sustaining its gains within a larger, probably corrective formation. I expect that the chances to break higher from this formation are much, much higher than actually breaking lower. How will we know? By producing like a higher high above 920. I think it's a very good signal that we're resuming to the upside. Having to do with palladium. Palladium had a very nice run higher, stalled once again at this ascending channel trend line resistance. So from a risk reward perspective in the short term, that was a nice short, which has been working so far. If anybody actually traded this channel. If we do break above the channel in $2,500, which is, a previous support resistance area, I think that's going to be a very bullish signal, and I think we should accelerate to the upside following that. Copper, also more or less the same deal, still trading within an ascending channel, still looks very well bid, and not coincidentally, in my opinion, looking more or less exactly as Kiwi does, right? Kiwi is breaking through this ascending channel. I mean, that if this was a corrective formation, this series of higher lows, I think that Kiwi has the potential of actually exploding higher. Speaking of the Kiwi, I wanted to visit today the Aussie yen and the Kiwi yen, but mostly the Aussie yen, and you'll see why. The Kiwi yen. The Aussie yen has broken through this corrective channel, and that is a bullish development. But I want to focus more on the Kiwi yen, because the Kiwi yen had a very nice confluence of resistances at 72. You can see it here. We had this formation, we had this long-term descending channel, the trend line passed from there. Also a horizontal support resistance area, the 88.6% fib from this move lower. I mean, multiple resistances at 72. That was enough to stall price action for a couple of days. And we seem to be breaking out today. So, we get a daily close above. I think that's a very bullish signal, and I think that we should see an extension higher. I think we can easily extend towards 76. We confirmed today, and I think this is a legitimate breakout. Not coincidentally, at the same time, USD yen is testing this trend line resistance. Obviously, if USD yen breaks to the upside after having first falsely broken to the downside, that's also going to be quite a bullish signal for USD yen. So the Kiwi looks very constructive. If the USD yen breaks to the upside, then the Kiwi yen, as you understand, as a combination, should do extremely well. So, you want to follow the trend of a move that seems to be resuming as we speak.
Great idea.
I think the Kiwi yen is a very good candidate as long as we confirm today. I think there's going to be more follow through as long as we confirm today. Now, having to do with yesterday, I finished up talking about the pound. That the pound was at a pivot area. We seem to have stalled for now there. So just a reminder that this is an interesting area to watch in the case of the cable. Now, looking at the short-term charts, Blake made the point that perhaps we have some kind of a corrective rebound here in the S&P, and yes, that might be the case. If that's the case, that's the kind of formation you should expect, right? Mm-hmm. So I do think that the risk might be in the defensive in the very short term, but I don't think that you should really push your luck to the downside, not unless we prove that this is something totally different. How are we going to do this if the next move lower has very strong momentum, if it even happens? That's the only way I would actually change my mind. So, keep that in mind with whatever that affects having to do with correlations. For example, we talked about the possibility that the metals are consolidating and they might push once more lower. That would indeed go together nicely as a correlation with the S&P producing, and of course the rest of the indices as well, producing one more leg to the downside. At the same time, perhaps the Nasdaq ends up attacking. Let's go on the daily actually. If that's the case, perhaps the Nasdaq ends up attacking once again these triangles support. But other than that, I don't think that you should push your luck, because there is absolutely no real evidence that something has really broken having to do with the bullish trend. VIX is also attempting to break lower from this formation. It's toying around with this support area around 24, 25. So, VIX looks like it might want to move lower. Now, of course, we might have an initial rebound, as I said, in the VIX if we do get another leg lower in the indices. But, the whole way that the VIX rebounded higher following that low over there, doesn't look to me like it's impulsive. So, as I said, I would be careful trying to fade risk assets.
The VIX needs to get back over 30, Steve. Would that change your picture a little bit?
Yeah, but it depends on how it does it as well. If it does it, in a slow manner, I think doesn't necessarily
change it.
mean much.
You need some directionality, explosive, impulsive, speed of light move.
Yes, that is correct.
All
And
right,
VIX has the tendency to create moves like that when it actually wants to move, as you know. I mean, when it moves, it can really move. Natural gas, it already proved that this area does have, validity with market participants. We've seen an initial rebound. Let's see if it can evolve in something like that. I mean, for the time being, as a first test, it did hold. As long as it's holding, there is no reason to look lower. So, as long as we're above this area, roughly at 288, I think you should, not try to fade the prior strength. I think we can just find support here and explode higher once again. But this is a pivot area for sure. So from a risk reward perspective, as long as it holds, looks good for more upside. Unlike oil, natural gas demand should be increasing, putting upward pressure on the price, says Jeffrey. And yes, I don't disagree with that at all. Rick, remember, media doesn't call elections, and news Main Street media is announcing nothing as they don't want the public to know facts. There are facts out there that I think what will happen, some facts come out, they cannot deny us. Yeah, personally, if you believe that the election result is going to be overturned, make a market for that, and I'd love to take the other side. I believe the chances of turning the election result as close to zero as anything can be. Nothing is zero in life, of course. No probability is zero in life, but in my opinion, it's like 0 point, and then we can argue on the decimals. So if you're offering anything more than that, I'd love to take the other side of the market, Rick. And it's not a political comment. It doesn't have to do with Trump or whatever. I just don't believe that. I think if there were really strong evidence of some mass fraud, we would already know about them. And if Trump had very strong evidence, he wouldn't stop talking about them. And whatever is not really massive, because you can't overturn like election results that are like 20,000, 30,000, 40,000 votes of difference. I think it won't matter at all. So I don't think this election result is going to be overturned. Now, I caught Blake showing the Euro QE. I don't know if he actually showed the Euro Aussie as well. And Euro QE does look like it's impulsively moving to the downside. This rebound here in the blue channel was clearly corrective, in my opinion. And the way we seem to be accelerating after breaking through it, makes me think there is a lot more downside. And, that brings us to what I think is a very interesting chart at the moment. And it is the Euros, which looks, much, much better from a technical perspective. It's much cleaner. We've had this prolonged period of consolidation. It started in the end of May. We've been consolidating within this slightly ascending channel, almost a range actually. And we're currently poking our head below this trend line support. I think we break below this, there's going to be a lot more downside, because this is also the trend line support that confluences from this massive channel, right? So I think Euros is in essence toying around with the idea of a very major breakdown. I think we can easily find ourselves to 155 within a few days if we break below this. So, in the watch list for today, I mentioned the Kiwi yen before. I think the Euros is probably an even better candidate. So I wanted to show this. Let me see what questions we have. Platinum Palladium, Euro is cracking. Now, having to do with Euro cracking, definitely as we showed, the Euro pairs are not looking really healthy. Having to do with the Euro USD, we have to keep redrawing, of course. And the reason we have to keep redrawing is when you don't have many, points from which to pass a trend line, there is no way to know which trend line is valid, right? I have to say that I don't see yet evidence of a major breakdown in Euro. In my opinion, as long as Euro holds above this trend line, you can see it here, right? Dates back to the 2008 high. You can see how important it is. I think that it's not a very smart idea trying to fade it. And of course, I'm not talking about like short-term trading, like intraday trading or whatever. That's, totally different. So, as long as we're holding above roughly 116, I wouldn't be taking the other side of the market. This formation here looks corrective to me. So in my opinion, the chances of an eventual break higher instead of a breakdown are much better. That's what I think about the Euro USD. Now, of course, anything can happen in the markets, but as I said, I maintain a bullish bias until proven otherwise and not the other way around. Okay. Let me see.
You looking for questions, Steve?
Yes, if you can, did we have any? Oh yeah, we have actually. I've seen a friend here is asking for the Nifty, and I didn't have the time to cover it earlier. Listen,
Wow.
Yeah, I said about the Nifty when we were doing this,
Yeah.
that this is clearly a corrective formation. I mean, it was more than obvious. So, I'm anything but surprised that if you look at this price action day, literally every single day we got higher during the past 5 days. So, you can't argue with this tape, right?
Yeah.
Next upside resistance, the 127% extension of this pullback at 13,770. Bottom line, it looks good. It looks healthy.
You have a breakaway gap in the rectangle. And then you had another gap a few days later, which could be called a runaway gap.
Mm-hmm.
And then what finally happens is you'll get one more gap, and then it'll be filled, and that's called an exhaustion gap. So
yeah, that can be the way it ends. Yeah, no disagreement there.
Yeah.
Now the same friend is asking about the USD INR. I still believe that until proven otherwise, this seems to be corrective. So I favor the downside more than the upside from here. Okay, that's what I think. Now, you can extend this trend line resistance and use that trend line as a pivot of direction. Somebody asked about Meow.
Kitty doesn't like that forecast.
Yeah, no, she just.
I'm telling you, when she disagrees with you, she meows.
Yeah, you think so? Huh?
How's her account doing?
No idea. Liki? Πώς είναι το account σου?
Her P&L's in the litter box.
Για πες. No disagreement.
Now she's quiet. Yeah.
Yeah, she's quiet because she's getting what she wants. Me petting her. Yeah. She's like, of course,
like
the sample.
Cat.
the sample is very small. I've had several cats, but it's not like it's statistically significant sample. I can tell you that the female ones, so far in my experience, have been more vocal and more demanding than the male ones. I mean, my male one is
What a
i-
surprise.
yeah, is next to me almost as much as she is, but you've never heard his voice. She's very, very vocal.
That's because he's dominated by the female one and emasculated. I've been that cat. Anyway, it's time for
Somebody,
Huh?
yeah, somebody was asking about Bitcoin, and the only thing I have to say is that it looks really good. And the last few days look to me like a very bullish consolidation, right? Look at it. I mean, it
Yeah.
can't, it
do
can't,
nothing wrong.
yeah, it can't do anything wrong, right? It had at some point, it had a few hours of a big sell-off, and immediately it got bought. So, I think it wants higher. I think it's going to get what it wants most likely than not. That's what I think about it. Who do we have today, Dale?
Kevin Arajo,
Okay.
White
Perfect.
Oak FX University. So I'm going to ask him, if he has room in his dormitory for an old timer like me. Anyway, Kevin, welcome to Face. Looking forward to talking to you. I think it's been quite some time. I don't even remember, I'm kind of I'm in my 60s. So welcome to Face, Kevin.
Can you hear me now?
Got you, Kevin.
Hey, how's it going, Dale?
Oh, so refresh my memory. How long has it been? Where
Oh
was it?
boy, I don't know, maybe about a
FX
year,
Street?
year and a half. I think we chatted one time after FX Street, if I remember. It was a while
Okay.
ago, year and a half ago or so.
Well, how have you been?
I've been pretty good. I can't
All
complain
right.
considering all the shenanigans going on in the world. I've been surviving.
Yeah.
How about you? You doing okay?
Okay. I'm doing okay. And I was just saying to Steve, I was wondering if you had any dorm rooms open at your university for me to spend a semester
Heck yeah,
or
come on
two
by.
there, huh? Anyway, have you used Zoom before, Kevin?
Not really, no.
Okay, so to share your screen,
Click on share
there's
screen.
yeah.
Okay. That's easy enough. Let's see here. Screen 2, I guess, is what it is. And share.
Beautiful.
You
Okay.
you can see my charts.
Yeah, got him up there, Kevin. So I'd like to start with your journey and how you got involved in the business. So that will refresh my memory, and also people that are attending now and see the video. I think we learn a lot, and it's always very interesting to find out how people got involved into trading and what they were doing prior and who their influences were. So what were you doing before you got involved in trading, Kevin?
I was cleaning toilets.
Okay. All right. So you were a motivated guy. Okay. So you were actually, and you're laughing about it, but you were in a you had a janitorial service.
Yeah, that's right. Yeah.
Okay.
Well, my father
right.
came over to this country from Portugal, had nothing. So he
Okay.
started working cleaning businesses and eventually started his own cleaning business. So I was working with him for many years. And then when he retired, I took over the business from him and was doing that down in the city in Toronto. I did that for about 13 years. I was managing cleaning staff. We were cleaning office buildings and all sorts of stuff.
Are you
And
still
then,
in Canada?
Yeah, I'm still in Canada. I just moved
Okay.
north of the city, about 2 hours north, into
Okay.
cottage country land.
Okay.
Tried to get in with nature as opposed to being in the city. So was doing running a cleaning business for a long time, and I just got to the point where I realized I didn't want to have to answer to anybody. I didn't want clients. I didn't want staff. I didn't want the corporate world. It just was eating away at my soul. And So I figured, listen, I have to find a way to make money, but how am I going to make money where I don't need staff and clients and all that sort of stuff? And so I got into real estate investing, did that for a little bit, and then I realized, tenants are a pain in the butt. And then I did some Google searches on learning how to trade, and I joined a couple places, spent a fortune, learned a few things,
Mhm.
learned what not to do, learned that, a lot of the material out there is not the
Yeah.
greatest of quality.
Yeah, you
And
really have to be a discerning consumer
yeah, you
of
do.
of trading educations. That probably motivated you to, after all the all the hard-earned money that you spent and really got nothing out of it from some people, that you wanted to do it right
Mhm.
for others. So, was there anyone that was good that really helped you make some breakthroughs and new paradigms in your trading? Or
Well,
was it really just, having to go through the whole thing yourself and mainly be self-taught?
Well, I think there's a little bit of good in everybody. Everybody has a little something to add. Anybody who puts their heart and soul into trading has learned something, has earned something that is valuable that I
Yeah.
have, received. But I think when it came down to it, I was not satisfied with what I was learning from other people, and
Mhm.
I learned some good stuff about the reality of the markets, being moved by the biggest institutions in the world. And that kind of opened my eyes to the fact that, the institutions are manipulating price, and they're using the media to help lure retail traders into taking the opposite side of their trades. And, when I came to realize that, and that was after many years of studying price action and looking at what the institutions were doing and looking at what the media was coming out and saying, I started to realize that was the truth. And I just been working very hard on trying to determine the best way I could how the institutions were getting into positions, getting off of positions, and how they lure retail traders into taking the opposite side of the trade. So
Okay.
I, so I've been doing that for many years, and that's basically how the school got started. A lot of people were following me, and they wanted more information that I wasn't willing to divulge for $0 and 0 cents. So I said, okay, well, people want to learn what I'm doing. Let's start up a school. That way, we can put lessons together and do things organized.
Okay. So let's I ask people this question. How long would you say it took going through this whole process before you made breakthroughs and felt more confident about your trading, that you actually started making money in the market consistently?
It was probably about after 3 years of working 12 hours a day every single day, about that.
Okay. Yeah, so your model of university is the average answer I get. I've done about 1,000 of these,
Hmm.
and most people say about 4 years. And why shouldn't it
Hmm.
be that long? I
Yeah,
mean, if you're a carpenter, you start off as an apprentice, right?
yeah.
And then a journeyman, and then a master, any trade. So 3 years, you were right in that area. Um, okay, why don't we get to some of your setups? And I see that you trade fairly naked. I mean, they're nice, clean charts. Why don't we start with upper left-hand corner and tell us what A2, A3, A5, what they mean?
Oh,
And yeah,
hmm,
you want to start there?
yeah, sure. That's a very advanced thing that we're doing at the school. I teach something called the sequence, which is basically we're looking at multiple time frames. Okay, I'm looking at 6, 3, monthly, weekly, daily, 4-hour time frames, and basically the idea is the institutions move price in a very specific way. They start by accumulating a position, and because they accumulate such a strong position, it makes a rally in price or a drop if they're accumulating a short. And then what they tend to do is reverse price back to the original place where they were accumulating that position, and then they reaccumulate the rest of the position that they want, and then they take price to the next target. So by studying supply and demand on just one time frame, if you go back to the historical charts, and we've gone back to the 80s and 90s and looked at charts, and we study what the institutions were doing with price action. Where are they creating supply? Where they're creating demand? And we draw on the trend lines that the institutions use against retail traders. And so, so then we track how price moves. All right. So it's one thing to understand how price moves on one time frame, but now you have to break it down into all the time frames, because what happens is price moves on the lower time frames, and the movements on the lower time frames are only used to facilitate the bigger moves on the higher time frames. So this A3, A5, this is basically tracking the moves of the institutions, where they're pushing price. Are they pushing up into a supply zone? And when they push price up into that supply, when it drops, where is it going to go, and where is it going to reverse from? And then it becomes like a puzzle. We're trying to figure out where the next move in price is going to be based on the previous moves. So that's what
Okay.
that
Okay, so I see you have 1780, and actually I have some moving averages there, and 1670. How did you come up with those? Were they fib numbers?
Where do you see those numbers, Dale?
I'm looking at your monthly upper left, 1781.86, 1670.43
Oh yeah,
for potential pullback targets.
Oh, here? Okay.
Yeah.
So everything you see in green is an area of demand that the institutions have buy orders, or they're areas of demand where the institutions are interested in buying again. And whenever you see rectangles in red, those are areas where the institutions have sell orders, or areas where the institutions are interested in selling. So in gold, price came up to these highs here, and we had, you know, big expectations that price was not going to go much higher, but it instead was
Why?
going to drop. Well, because if you take a look at the COT report, you know, the data that
Okay.
comes out every single on Friday, they're basically breaking down the positions by the institutions, the largest players in the world.
Yeah, the
So-
commercials were as short, you know, a week or so ago as they were, I don't know, 6-8 months ago near the top, right?
Yeah, well, we don't focus on commercials. So
Oh,
that's one of the
okay.
that's one of the myths that is being taught to people that is not true. Everybody
Really?
says,
Okay, well, I learned the myth.
well, I'll tell you why I believe it's a myth, because they say follow the commercials because they are the bigger players. Right. But if you look into who the commercials are, they're typically the traders that are looking to hedge positions based on,
Right.
you know, what they physically have. So we don't care about hedging. We care about going with those institutions who are going long because they are expecting price to go upwards. So what I've found in all my years is that if
Okay.
I only focused on the non-commercials, they gave me insight as to what price was going to do next. So here's a
Okay.
perfect example. So we're looking at a spreadsheet with all the weekly positions on gold that I've plotted. Not only
Yeah.
did I plot them, but if you take a look and you go through the history, I go back all the way. I collected every single week's data from the CFTC website. It took me forever to do it, but I did it.
Yeah.
And basically,
Wow.
when you do that and you color code everything, now I'm able to see when are they super aggressive with their long positions based on historical positions. If we
Right.
know that the all-time largest position they ever had in gold was 408,000, if we get close to there, the cells have been coded to turn a deep red, so that tells me they're starting to get aggressive. And when they're starting to get aggressive with long positions, and then you see something like the euro, which just recently in August 11th was 266,000, that was an all-time long position. And guess what I noticed through studying the historical data is that almost every single time the institutions are reaching a historical amount of long positions, because you don't have many more funds to place into a position. I mean, think about it. You know, even the largest banks in the world, they work within some kind of limitations. You know, they don't have unlimited money. You know, in a way they do, but when it comes to trading, what I've seen with my own eyes, based on studying the historical charts, is they work within certain limitations. Meaning, if you've piled in with a massive amount of long positions, there's nothing
Where's
else
the
to
buying
do.
power going to come from after that? Is that your point?
Exactly.
Okay.
Exactly.
All
So
right.
what
Do you
tends to happen
divide
is
these? You divide these non-commercials into large and small specs, or just a total of both?
just a total.
Okay.
There's a total. Yeah.
Okay.
So as we can see, back in August 11th, they became extremely aggressive. In fact, they became, all-time highs with long positions. And so we were saying at the school, be careful with going long because price is not going to go higher. And that was when the euro was hitting these highs up here.
120.
Yeah, up in the 120s.
Okay.
And so if you take a look and you scan through the news, you'll see all these articles coming out about the euro going higher.
Yeah.
And then that's what happens is that, retail traders get excited. They read the news says it's going to go higher. They buy. Meanwhile, they have no idea that the biggest banks in the world, the ones that are actually moving price, they've already accumulated along. They've accumulated along for the last few months from lower prices. And now they don't have anything else to accumulate with longs. So the only thing they can do to take, to actually get some money is to take profits on those positions. And when they flood the market with these positions, it's going to cause price to go down. And think about it. If they're already bought all the long positions, they have to get rid of it. Who are they going to get rid of it to? They have to find
retail.
buying off of them.
Yeah. Yeah. Well, I tell you what, it's a very interesting take on COT. I've never looked at it that way. And, it is also true. You're a very hardworking guy. And most people that are successful in anything, especially traders, people think that the money's just going to drop into their account. And I could tell by the kind of work you do and how extensive and reaching back historically to accumulate this information that, you have the secret to trading. And the secret is it's hard work, it's persistence, and living through adversity.
Yes, sir.
Okay,
Yeah,
so
that's what it comes down to.
yeah, I learned from you today. That's cool.
Oh, that's great.
So I mean, I always
that's
used to, I viewed COT and I like it, but I thought, I at first, and I made many market mistakes following the commercials, and mainly I thought it was because they're always early, and they have deeper pockets than me. Eventually, the market would move in that direction. But what a great point that they're just hedging. So, if they're a jeweler and they need gold inventory, they have long hedges on. And if they're a miner, they're locking in price and shorting it to lock in the price in case it falls. So
that's right.
Really an interesting take on COT here, Kevin.
Yeah, thanks.
So with this information and what gold has done lately, is it telling you there's a continuation move to those lower levels? And is there anything that you're seeing that might be around a turning point now?
Yeah, from what we see, gold's going to continue dropping. It's not going higher from these levels. All the markets are pretty much correlated in some degree.
Yeah, have you ever seen markets so binary, Kevin? You've been doing it a while, right? So, there used to be more differentiation with asset classes, and now it's just binary. I mean, gold and equities move together. There are some correlations, but it seems like
well, I wouldn't know
like
much about
balloon.
I wouldn't know much about the equities market because I don't track it at all. But I do know, in terms of gold, oil, and all the major currency pairs and the major cross pairs, they all pretty much are aligned with each other. I mean, meaning if euro's going to drop, gold's going to drop. If oil's going to go up, the CAD's going to get stronger. If the dollar drops, all the dollar pairs are going to go down. So when we're tracking the supply and demand in all the charts, we could have a handful of charts that are not giving us a very strong signal of what's going to happen. But if one of those charts is giving us a strong signal and it starts to move, it pretty much will tell us the other ones will likely do the same thing.
Do you trade oil?
I do trade oil.
White Oak? Yeah. Okay, so was there anything in the COT data that could have pointed someone's eye in the direction that, most of the, trading world was pretty bearish energy, and they've been the weakest performing part of the equity market, and it's really come to life in the last week or so. Was there anything in COT data that forecasted this rally in energy?
Well, it's funny. I think the second time we chatted, I believe oil was down here somewhere. And we were forecasting a move of oil up to here. And I remember the conversation very well because you were asking me, well, what is it that you think is going to happen in the world to cause price to go up there? And my answer was, it doesn't matter what happens in the world. Whatever the institutions say is going to happen with the markets is what's going to happen with the markets. And price did eventually get up there, as you can see.
Yeah.
And then up here, based on the market dynamic, we knew that price was going to drop. So the big myth about the markets, from my perspective, is that the markets move based on what is taking place in the world. And it really isn't like that. And the reason why I know that is because when you study historical charts, Dale, I can go back to the Euro US dollar, and I can go back to, 1999, and I can look at the charts, and the charts will move in a somewhat predictable manner. And, these moves take place without even realizing what was happening in the world at that time. Why is that? Well, it's because the charts will move in the direction that the institutions want them to move, even, regardless of if Trump's in office, if there's a war, it makes no difference. When we look at oil, for instance, let me switch over to the oil. They're always somewhat long, okay? They're always somewhat long. But here's the deal. Some pairs we can't count on the COT data, and oil was that. We couldn't really count on the COT data. But when price was up here on the monthly chart, we knew that there was going to be a shift in momentum and then a push down. It goes back to what I was saying before. What the institutions do is they fill in a large amount of short positions. It causes price to drop, which is this big drop over here. And then they reverse price back up to reaccumulate those short positions. And then they eventually will push price. Now, did I think oil is going to go down
Negative?
to minus? No.
No, we did.
I
Huh?
couldn't believe that. I was shocked.
Yeah, I couldn't believe it either. I've never
I thought
seen
my
it.
data feed was going bonkers.
Yeah,
I just
yeah.
I couldn't understand that.
Okay.
But you see this area of demand that we had, and
Yeah.
we had this drawn in, Dale, a long time ago. All right. This
Yeah,
area
yeah.
of demand stems from 2003. Now, who would think that something that took place in 2003 would have any effect on what's happening with price today? You would
Me.
think there is no, I wouldn't believe that. I mean, if you told me that, I'd say, what does 2003 have anything to do with 2020? Well, listen, it does have something to do with it. Why?
The market
I
has a
couldn't
long
say.
memory.
I don't know
Right?
if
I
it's
mean-
that. I don't know if it's algorithms. I think, it has something to do with a little bit of the both. If,
Yeah.
I
mean,
think,
look at the 2011 high in gold at 1920. In 2020 was a battleground.
mhm,
So,
yeah.
it's not, it's 9 years ago, that high.
mhm.
And it was still a battleground area. Did you notice that? 1920, I think I saw it on your chart. Previous all-time
1920.
high in
Let
gold.
me see. Oh, here? 2011 you're talking about?
Yeah.
Yeah, and I bet you if we took a look at the institution's positions, they were massively long back
Yeah.
then.
Yeah.
Let's see, 2000, what are we, 2011?
Would you be selling rallies in gold even after this big break?
Now, selling rallies? No, I would not.
Okay.
Because, a lot of people ask me that. They're like, well, if you're expecting price to drop, why wouldn't you just sell? Well, because it's against the odds. And if you do sell, where's your stop loss? That's the issue. It's about risk management. You can't just sell because at the end of the day, all the trends are up. Price can just stop or stall, reverse, and then head higher, and it'll take you out. The higher odds trades is going long on gold and not going short.
Okay.
All right, so let me
Trade
get
with
back
the
to this oil. I got to show you the oil. This is pretty exciting stuff. So on oil, this monthly chart, right? we're talking about that demand zone going back to 2000 and whatever, 2003. And
Yeah.
here it was. This is the area. So our expectations, Dale, when price was up here, once it dropped like this, we were expecting it to reverse back up and then head down, which is what it did. It stayed in the
Yeah.
range here for a bit until it broke down. Our expectations was that it was going to come here into this area and then head higher.
Mhm.
And so I had buy orders to buy there, and then all of a sudden it dropped to the minuses, and it was, you know, a little bit of a surprise. But what I want to point out is when price comes up and closes inside those areas, it's telling us that that area is in play, meaning that, you know how you were asking me about the A3, the A2, A4s? Okay.
Yes.
So
Yeah.
we're tracking all the moves. We're tracking it's dropping. It comes into an area of demand on what time frame? On the monthly. So what's the expected move? It's going to go up to a monthly supply zone, which is what it did right here. This is the monthly area of supply. So once we saw price close in that area of demand, we knew with high degree of certainty that it was going to head up into this area here. But what we're also seeing when we're looking at the moves that the markets are making is that oil is going to likely come up until here. And then when it hits here, we're going to see a big drop like that.
Hey,
That
there's
is
a
what
call.
this-
All
yes.
right. All right. So Kevin, why don't you show your website for people that haven't maxed out their student loan debt to go to your university? You know, how they could, how's your football team doing this fall?
Oh, I don't watch football.
No,
I don't
but
watch
no,
sports.
White Oak Trading University football team.
I
Huh?
gotcha. Sorry.
How's it doing?
Well, apparently we just got told that we can't tackle anybody anymore because that would break the social distancing rule. So it's going
Yeah,
to kind of change the game.
so now it's
Uh,
flag football.
yeah,
Okay,
exactly.
so all right, so this is where you find Kevin, and what if you want? You got a free video, free offer. What's tuition at White Oak Trading?
Well, right now we're okay. So this is the website www.whiteoakfx.com, and right now we got a promotion. If you want to be a full-time student and you want to learn, get access to our exclusive video library, and learn about supply and demand, how to read the COT, we have a promotion for $175. Gets you your first 3 months, which gives you a taste of what's going on. Look at the lessons, see what you like, get what you want out of it. If you want to stick around and learn more, stick around. If not, you can leave. If you do stick around, it's $125 a month after that. But if you just want access to the information, we do a report every single weekend breaking down the moves of the institutions, the COT data, all that stuff, our forecasts and our trades. You can become just a basic member, and it's $49 a month for that.
What is Sherlock?
Sherlock is a system that we created. It's the way
Okay.
of forecasting the market.
Okay, is it like an algo?
No,
Or,
no.
okay, it's
It's
just
purely manual.
Okay,
It's
proprietary by you.
it's a way of doing the analysis, gathering evidence to determine what the next moves in the markets are going to be.
You know, being a good trader is like being a good attorney. The more evidence you have, the more
Exactly.
compelling the case is to assume risk.
Yeah, well said.
Thank you, my trading warrior brother. I'm
Yeah,
glad
thank
we
you, my
got
friend.
back together, man. And
Yeah, it was an honor.
yeah, and you're a very hardworking guy, and I respect that. And we've talked before, so even though we haven't done this in a while, even back then you were my trading warrior brother, and I'm rooting for you and your student body.
Thank you. I appreciate that. It was a pleasure speaking with you, man. God bless.
All right, buddy.
All right,
Everyone,
take care of yourself.
Kevin, help me with the pronunciation of your last name.
Arujo.
Arujo, Kevin
Arujo.
Arujo, everybody. And you could find him on Twitter at White Oak Trading University or White Oak FX.
White Oak FX.
Okay. Kevin, good luck. Have a great fall trading season. And
too.
we'll be in touch to, not let as much time pass in between. Okay.
That would be great. Thank you, Dale.
All right,
Enjoy your
bye.
day.
All right, everyone. Remember, don't just count your pips, count your blessings. We'll see everyone tomorrow. Good hunting. Adios.